Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so I have Marco Santarelli on the line, and he's founder and CEO of Norada Real Estate Investments. Marco, welcome to the show.
Thank you, Adam. It's an honor to be on your show.
Marco, so this is one of my favorite topics, how to create wealth, how to create passive income through real estate. A lot of business owners, entrepreneurs, and senior level executives that watch this show, and everybody's always wondering, like, how do I do this? Can anybody invest in real estate? What's the best way to do it? What's hot? What's the market looking like? What geography should I be looking at? We'll go through a bunch of these questions to unpack the knowledge that you have for the audience and for myself. But before we get into that, we'll start this episode the way that we start them all. So, Marco, we at Mission Matters amplify stories for entrepreneurs, executives, and experts. That's our mission. Marco, what mission matters to you?
Well, my main mission, and it was my personal mission, which has spilled over into my company's mission, that is literally to help 1 million people achieve financial independence through real estate investing. And we're well on our path for that. But our objective and a mission at Norada Real Estate Investments is to help 1 million people achieve financial independence.
It's a great mission, and I always say if you're blessed, finding out a way to be a blessing just brings more, and it just creates more in the marketplace and in the world. So happy to have you on as a mission based entrepreneur. So I guess just going a little bit for what we'll get into Norada real estate investments, of course, but going a little bit further back into your career, like how did all this get started, like the real estate path?
Well, back when I was a teenager, I wanted to figure out the mystery of money. I was always fascinated by those people who didn't have to work. And so I took it on at a relatively young age to just study entrepreneurship, business, investing, and money. And in that process, I realized that real estate was the most historically proven asset class to create and preserve wealth. And a lot of the people that I knew through my parents that were financially independent had passive income coming in through their portfolio of real estate. So that became my mission, if you will, at an early age. So when I turned 18 years old, I bought my first rental property. It was a townhome unit that had needed a little bit of work, but I purchased it. I had enough income to qualify for financing. I fixed it up. I put a sign on the lawn. I leased it. I managed it myself. There was no internet back then. So, it was all newspapers and signage. But it was a great experience. And you could almost say that the whole process was textbook. But the writing was on the wall. So as the years went by, I got my real estate license. I started selling real estate to generate more income. I bought my second property, and things just accelerated slowly over the years. But then I pushed the gas pedal down hard in 2003 when we were in the middle of another real estate boom and credit was relatively easy. And I'm sure a lot of people listening to this will remember that, because that loose and easy credit led to what essentially became the Great Recession of 2008.
Yeah.
But at that point, I spent from late 2003 to 2004, I bought 84 units, 84 doors in a 9-month period. And so I really, it was a big hustle, but I used creative investment strategies. I used all kinds of strategies to do that. But essentially what I did is I created systems for myself, investing from Southern California, 3,000 miles away in other states. And that was what really created my company as of today, 18 years ago, Norada Real Estate Investments. It was really that one point in time where people were coming to me asking me for help.
So I wanted to, what an amazing story, first of all, starting as a teenager. I remember, investing with some older family members as a teenager as well, and thinking about like the first property. And I remember like fixing up homes and stuff like that. I'm from Michigan, so pretty easy to do over there, I would argue, compared to LA, property value wise, right? Easier to get into a property maybe. But I remember those days, and I'm interested to hear your take on this. So we'll spend some time, obviously, on the more senior level investors, and we'll talk about like higher level strategies in this interview, of course. But maybe let's pause for a moment and let's give some love to the younger real estate investors out there that are maybe in their early teen or their late teens, I should say, or even early 20s, and they're in college or just graduating college and they're thinking about that first property. Let's give them a little bit of love. What kind of things would you tell them as they kind of embark on that first property?
Well, everybody gets started at some point, right?
Yeah.
But the two key things that people need in order to invest, generally speaking, are the two C's: capital and credit.
Hmm.
So it's not that difficult to build good credit or qualifying credit for mortgage financing. So you could take advantage of the cheap, historically cheap money available out there to help you acquire rental real estate.
Mhm.
But where I think a lot of people get hung up on is the capital for the down payment.
Mhm.
And so if you don't have the ability to save enough quickly, first of all, you got to save. That's the bottom line.
Mhm.
You got to save so you can have enough capital to put as a down payment and put that money to work. That's how you buy your first property and your second, your third, and so on and so on. But if you can't save, you got to start cutting expenses or increase your income, or both. I mean, that's really what you have to look at, is your life situation, your lifestyle, and how you can improve your rate of savings. If you're not able to save fast enough, you've got to maybe create a side hustle, maybe get a second job for a period of time, but
Mhm.
you've got to figure out ways where you can increase your savings so you can start investing. Once you have the capital and the credit, you've got to pull the trigger. And this is where some people get hung up, is they think that they need to be the most educated investor in the world before they can take action. And the reality is you just need to have enough information. And this is a key point, which we can come back to later, the right team around you. Because if you
Yeah.
have enough base level knowledge and you have the right team to help you execute on your vision, your strategy,
Mhm.
then you can move very quickly.
Mhm.
And you can minimize any kind of risks along the way because you've got the team to help you navigate those landmines. So it's really important to have the capital and the credit and the right team around you, and then pull the trigger, take action, because that first property might be a little bit scary for some, not for everybody. But once you have that first property, you're going to look back and say, okay, that wasn't so bad. I've got the gist of it. Let me buy that next one, because now you're going to get hooked. And
Mhm.
after you have that second one, it's going to start to snowball, and you want to go after that third unit, the fourth unit, and so on and so on. And before you know it, you're going to have 5, 10, 20 units, properties, call them doors. And now you've set yourself up for financial independence.
Mm. Man, Marco, I feel like you just now took me down memory lane. I haven't thought about this in a long time. My first property on my own was a fourplex. I lived in one. I rented out the others. I lived for free for years as a youngin. And nowadays, what you just now talked about, the side hustle, I'm gonna get on my soapbox for a moment. These kids these days, I mean, Uber, DoorDash, all these other ways to earn money. Like, I'm not, whatever. We all have obligations, right? But to me, nowadays with this gig economy, if somebody wants to make some extra cash, put it away for real estate and put it away for investing, like, they can do it. It's like there's a couple hours a day somewhere where you can earn some extra cash. Sorry, I had to get on my soapbox for a minute there,
Yeah.
Marco, because you took me down memory lane. I'm like, what I had to do when I was a kid to earn the extra money to invest. Come on, that was hard labor. Now you got plenty of opportunity. So sorry about that, Marco.
No, you're fine. By the way, Adam, I will make a quick comment. You know,
Yeah,
what you just described about your fourplex situation and
yeah.
you living free in one of the units,
Cash
that
flow, come on. It was beautiful. I forgot that you had to pay for rent. I forgot. I was like, I thought you get paid to live here.
but what you just described actually is one of several ways that people can get started investing in real estate. And there's actually a phrase for what you did. It's called house hacking.
Mhm.
You essentially hacked your way into a property and being able to live either free or at very low cost. And
Mhm.
what you're doing is you're building up equity over the years as you live virtually rent free or mortgage free, because you've got other people paying your
Mhm.
mortgage off for you. So that's a form of getting started called house hacking. So people listening to this that have enough for a down payment, and especially if you're looking at an expensive market like in
Mhm.
coastal markets like California, that's a very good way to get started.
Awesome. All right, let's move on a bit here. So I want to, and so I think we covered some of the, let's say, beginner side of things and what needs to be done. So I want to make this distinction here because when we talk about creating wealth and passive income through real estate, maybe from your vantage point, being in the industry so long, like what does that mean? We know maybe the passive income part, or maybe we don't. Like, can you define this for us?
Well, the passive income part is pretty straightforward. If you've got income producing real estate, that means you own the real estate, you control it, you have all the benefits of that real estate, and you have someone living there. So it's an exchange of value. Someone's happily paying you rent because you're giving them, safe, clean, functional housing to live in. And
Yeah.
that's the idea of having, prudent or smart investment real estate. So you've got rental properties. People want to live in that area. They want to live in your house. So they're paying rent every month. That rent pays your expenses. That rent pays your debt service, which is your mortgage, and pays that down. And so what happens is every month, what's left over is is income to you. It's passive income.
Mhm.
So you get that every month, regardless of whether you're working or not, whether you're on vacation or not. So as you build your real estate portfolio over time, you'll have enough units where that passive income is enough to cover your living expenses, and that's the definition of financial freedom or financial
Yeah.
independence. And then as time goes on, those rents increase, your cash flows increase on your properties, and you have more passive income. Now you're truly living financially free. So that's the income side of
Mhm.
your question. The wealth side of it is the fact that as the months go by and the years go by, two things happen. Your equity increases because of one, the loan or the mortgage loan you have on that property gets smaller and smaller by the month and by the year, because every time you make a mortgage payment, you're paying off a piece of that principal. So your equity increases. The other thing that happens, as we've seen, especially over the last 2 years, is your equity increases through appreciation, which is just, factors of supply and demand and the factors of inflation. So your equity is increasing in two ways: amortization of your loan and
Mhm.
appreciation in your property. And we're all familiar with that, especially if you've been paying attention here for the last 18 to 24 months.
Mhm.
So another way to describe that wealth or that equity is your net worth. So when you're creating wealth, it means you're adding to your personal balance sheet, which means that you're increasing the amount of equity you have in the assets you own.
Mhm.
So real estate's beautiful for that, because you can add passive income to your lifestyle, to your income. You can continually add to it. So you increase your income, you increase your wealth through the equity growth. And that's why real estate is such a powerful investment. So
Mhm.
maybe that's a long answer to your question, but I think it's worth emphasizing that it's a powerful tool. It's a powerful investment class to
Mhm.
create passive income and to create wealth.
Yeah, no, it's a great answer, and I want to unpack some of that. So part of what you said, so people paying you rent. I always like to look at it from the other side of the coin. So if you've never owned a property, or maybe you're a couple properties and then you already get this, but or if you have owned property, but if you haven't, think about it this way: like you pay rent to somebody, now people are paying rent to you. Pretty simple, right? So now people are paying. So now you become the bank of sorts. And then in terms of the amortization part that Marco mentioned and what that looks like, so think about it like this: you're paying your loan down, so your debt's going down a bit, and then at the same time, if it depends on the market, of course, if the value of the property is rising at the same time, like that's going to look good on your balance sheet. So that means that the debt side is going to go down on the balance sheet. Because why? Because the person that's paying that's paying you that rent, you're using that to pay down part of the mortgage, potentially, depending on the type of loan structure you have. So that's going down. And then on the other side of things, the asset column, or the value of the property overall, if that's going up, now that side's getting heavier, and we want a heavy asset column, in my opinion, and I want a light debt column, if it makes sense structure wise, of course, on that side. So the idea here, though, that I'd like to emphasize, and I'd actually like your opinion on, Marco, is that, like, can anybody do this? Like, is this achievable? Is that mailbox money a reality? Like, is this possible?
Well, can anybody do it? Yes. Is it right for everybody? Maybe not.
Mhm.
There's two things I look at. One is the thing we talked about before. Do you have, the capital and ideally the credit? Because look, you can buy real estate all cash. You don't need to finance it with mortgage
Mhm.
financing, although I don't see any reason why you would want to do that. But if you've got capital and you've got credit, you can buy real estate.
Mhm.
It's not difficult to buy real estate.
Yeah.
But the other thing that you have to look at is more of the soft side of it, and that is, do you
Mm.
have the interest, the willingness, and the
Mhm.
desire to invest in real estate? Because let's face it, you can talk to a lot of people and they
Mhm.
know that real estate is a good investment, but they have no desire to invest. So
Yeah.
other people that you really can't help because they don't want your help.
Mhm.
So you have to have the interest and the desire to invest,
Mhm.
and if you've got that, then you can build a team around you and move forward and start building your real estate portfolio
Mhm.
and your financial independence.
Yeah, and I like to, a lot of entrepreneurs and executives that watch this. So I like to kind of juxtapose the idea of building a team to building your business. Like you might start out as a solopreneur and you're out there getting your first property. Okay, that's great. You can kind of handle that. But as things grow, as you get more capital, as you want to buy more, as you want to scale, as we would say in business, the same kind of concept, maybe different functions for the team, applies in real estate. If you want to go from, because you can't necessarily do it all on your own, you're going to need help, you're going to need a team, and you're going to need key players along the way. Can you maybe unpack for us, Marco, what a team could look like, or just that concept of it takes a team to do this and to scale?
Well, the whole concept of building a team around you is
Mhm.
exactly what we do at Norada Real Estate Investments.
Mhm.
We provide you that entire team. In
Mhm.
fact, we are your primary source of contact. Think of us as the hub of a wheel,
Mhm.
and anything and everything you would need as a real estate investor or a professional looking to invest in real estate,
Yeah.
we're going to provide to you. So there's roughly about 8 to 10 people that you'll want on your team, but there's
Mhm.
5 core people, and these are the ones I'll mention because this is essentially the system that we've built. And you could do this too. And this is how I started, as I mentioned
Mhm.
before. Back in 2003, when I was investing from Southern California,
Mhm.
3,000 miles away in Florida, Georgia, Michigan. So I assembled my team through due diligence and vetting and whatnot. We've already done all that homework and due diligence, so it's turnkey, if you
Mhm.
will, from where I sit. But those 5 key people are essentially this: that first person or that first seat you fill are the is the person or the people or the company that is going to provide you deal flow. So if you're looking for investment properties, regardless of the market, you need those people who can provide you the deals that you're looking for that fit
Mhm.
inside your buy box. The second person on your team is going to be one or more lenders that provide you investment financing, meaning mortgage financing specifically for investment property. So you've got your acquisitions person or people, you've got your lender or lenders. The third is your property management. So you want full service professional property management, and those are your boots on the ground in the market where you're investing in. Whether you're investing in Indianapolis or Jacksonville, Florida, or wherever it may be. Those are the 3 key people. The fourth and the fifth is essentially your asset protection attorney, who you will work with just on and off from time to time. And then your tax advisor or your tax strategist. This is not a bookkeeper. This is not your CPA. This is someone who's going to help you optimize your 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 tax situation. So you're deferring taxes and you're minimizing the taxes you pay, because real estate is a powerful tool to minimize, eliminate, and defer taxes, which we
Mhm.
all love. And so that's one of the major benefits of investing in real estate, especially if your audience listening to this right now are high income earners. They're professionals, entrepreneurs, CEOs, business owners. You definitely want to be able to increase your income while at the same time lower, minimize, and defer your taxes. Because that just helps to accelerate. It puts more money in your pocket, but it
Yeah.
helps to accelerate your wealth creation, because instead of paying the IRS those taxes, you could use that same money to put into more assets, more investments, more real estate to accelerate what you're doing in terms of creating that wealth and that passive income.
Yeah, and so and just piggybacking on that, so essentially, I mean, why pay it to Uncle Sam if you don't have to right now? Legitimately, right, based off of taking advantage of the tax laws that allow for deferral and other benefits, and then if that money's in your pocket, you can buy more properties, right?
Exactly, and that's the goal,
Yeah.
especially if you're in what I call growth mode or
Mhm.
building mode, or even just getting started. You want to put as much capital towards income producing assets as you can, until you get to the
Mhm.
point where you don't want to invest anymore. You're
Mhm.
on autopilot. You've just got passive income, more than you need, coming in each and every month. at that point, you still want tax strategy, but you don't
Mhm.
necessarily need to accelerate, you know, that income into more assets because you might be very comfortable where you are.
Mhm. So I want to go further into Norada real estate investments. So you mentioned the team concept, and that's what you're providing. So I got that. What type of clients do you find? I mean, I know you work with many different types of investors, but what kind of investors and clients do you find get the most value out of working with your team, you and your team? I mean, usually a good fit?
Well, because of the model we've built, we actually provide a ton of value to everybody, whether you're a newbie just getting started and
Mm,
this is your first investment property, or you're a seasoned real estate investor, you already have a portfolio of 5, 10, 20
mhm,
or more units or properties. We provide the same service, the same value, and that is really just to provide
mm,
you counseling, advice, market selection, the properties that you need, the property management to go with those properties,
mhm,
the financing, and all the other resources that you could possibly need, from inspectors to title companies to asset protection attorneys, and on the list goes.
mhm,
All, like I said before, I like to use the model of us being the spoke, or the hub of a wheel, and everything you need being a spoke. And what's interesting about our business model is we provide all that value, all those resources to
mhm,
you at no cost. So,
mhm.
some people are taken back by that, saying, well, you don't charge us anything, there's no fee. No, there's no fee whatsoever during, for, or after. We are your one-stop shop, if you will, for buying and investing in income producing, uh, turnkey investment property in about 25 different markets around the country. So we operate nationwide. We choose about 20 to 25 markets because of their fundamentals and their availability of inventory and the teams that we have as boots on the ground in those markets. But that's our business model, is essentially
Yeah.
to provide you all the resources and knowledge that you need to invest, as well as the properties.
Mm,
Um, and it's a value add service. So there is no cost to you as the investor, our client.
mm. And so you don't have to go through all 25, but just an example maybe of a few of the markets just for people watching?
So this is a good question because I'm going to answer it with a little bit more meat than you're
Mm.
probably expecting.
I like it.
There's
I like
generally
it.
All right. There's two basic types of markets. You've got a cash
Mhm,
flow market and a growth market. The
mhm,
cash flow markets are your more linear, boring markets that really don't see cyclical patterns in their price appreciation or depreciation.
mhm,
But those are good for cash flow because they have good cash on cash returns.
mhm,
They're very boring but very steady in terms of income. Your growth markets are the ones that are experiencing strong appreciation
mhm.
historically, like recently, and
Yeah.
are prone to experience strong appreciation in the near term, the
Mm,
short term, the near future. Depending on what your strategy is, and this is the conversation that you would have with our team here, like
mhm,
one of our investment counselors who was assigned to you, is based on your goals and your
mhm,
strategy, what you are trying to achieve, your objectives in investing.
mhm,
Should you be investing in growth markets, or should you be focused on cash flow markets? We
mhm,
have both. That's why we're in, about 25 different markets.
mm,
Some of those markets provide stronger or higher cash on cash returns than the growth markets. But if
mhm,
your strategy is maximize that appreciation, that upside potential, then you're going to focus on building your portfolio in markets that are experiencing strong growth. The give
mhm,
and the take here is that they typically have lower cash on cash returns, and not
mhm,
always, but sometimes lower cash flows.
mhm,
So there's no right or wrong answer. They're both good options. It just depends on what you're trying to achieve. And for some
mhm,
investors, it's a hybrid approach. They might be purchasing or investing in two properties a year. So we have
mhm,
investors that do 5 to 10 a year. Some of them only can afford to do one a year.
mhm,
But a hybrid approach would be, a few in a growth market and a few in a
mhm,
cash flow market, and you just continue to build that up until you have a footprint in the number of
mhm,
markets that make sense for your investment goals. So that's a big long answer to your question, but it's essentially two types of markets. The reason we're in so many different markets is because
mhm,
we want the cash flow markets, we want the growth markets, because
mhm.
different investors have different needs.
Yeah, and just as an example, and not, and again, this in the context of this can fit into, an overall portfolio, but maybe somebody already has a lot of income and they're looking for more appreciation. They don't really need any more income. Like that's not really something that they need to do at the moment. They're looking for the tax break and they want that longer term. They want to defer, so maybe they're going to go to that type of market, or maybe there's somebody else on the other side of the spectrum where they're looking for more income,
Hmm.
and that's part of their, maybe they're nearing retirement, or maybe they're thinking about that end of that spectrum of their life on how they can live off of this passive income and this mailbox money, right? So, and again, those are very simple examples. So by all means, for everybody watching, at the end of this, we'll let Marco leave contact information and all that. Like, you want to definitely talk to their investment consultants to get a detailed analysis for your situation. But those are just really simple examples of ways to think about this. If you need money for retirement or other things like that, and you're already at that point, or wherever your spectrum is, maybe you're looking at cash flow, and maybe you're looking at that income portion of it. If you're not, and then maybe you're not. And then the hybrid that Marco mentioned, and all of this is, of course, in the context of your overall investment strategy and your other investments and portfolios. But just a way to look at this. Um, but I love your answer, Marco. I think it's great. I think it's accurate, and I think it provides a lot of value because we don't have this conversation often enough. A lot of times, I feel like many, what gets the headlines. It's basically like, the properties are appreciating here, and what's going on there, and like the hottest real estate markets to invest in. But it may be hot, but if it doesn't match your investment objective, it still may not be right for you, right?
Exactly. Yeah. I don't know if you have another question, but I was just going to throw a comment out there.
Mhm,
I mean, someone who's on the fence thinking about investment real estate or
mhm,
has
mhm,
invested in real estate in the past, um, and now they're starting to think about it some more now,
mhm,
especially after the price run we've had. You should not you should not be hesitant. You should actually almost double down, and the reason for that is because of inflation. We've seen so much inflation, especially over the last 12 to 24 months,
mhm,
that you need to protect yourself against inflation.
mhm,
Real estate is one of the best hedges against inflation. It always has been, and continues to be. And
mhm,
so, to protect yourself, real estate, investment real estate, well, real estate in general, but investment real estate is one of the best ways to protect the purchasing power of your dollars,
mhm.
um, because it's such a powerful hedge against inflation. So, I wanted to bring that up just in case you didn't have a question based around it. So I think it's important to keep that in mind, is that, your savings are being eroded every single year because of the real rate of inflation, which arguably can be pegged at between 10 and 15%, depending on
Mhm.
which reports and information you look at. So if you're losing 10% a year, you should definitely protect yourself. How do you do that? Well, there are different ways to do that, but real estate is one of the most powerful ways to do it.
Absolutely. And historically, I mean, that's just not in this market, but just historically, that's it. That's an accurate statement. So you said something earlier that I do want to circle back to, because you dropped it casually, but I don't want to glance over it, especially in the context of talking about Norada real estate investments. And that is the idea of implementing systems. Like systems in business, I feel like we understand there has to be systems, there has to be protocols, there has to be these things, or a business can't succeed. Can you talk a little bit more about just kind of the systems that are in place and just overall how you work with clients? I'm looking for more so like the user experience of what it looks like to work with you and your team.
Yeah, well, I'm a big believer in systems, and I think it's good to have systems in different parts of your
Mhm.
life. Not to say that your entire life should be systematized.
Yeah.
Yeah, sometimes you have to, live a little bit freely and
Mhm.
ad hoc. But when it comes to business and investing, it's important to have systems, because the systems are what keep you on track and make sure
Mhm.
that you're not stepping on landmines. Um, but it creates a repeatable, predictable system or
Mhm.
result. And that's what systems are all about. And a good example of that is looking at McDonald's. McDonald's has the exact same system in every restaurant around the world. It works every time flawlessly, and you don't need to be an MBA student, uh, or the smartest person in the world to operate those systems. They just work because they're designed that way. And so, at Norada Real Estate Investments, we've created systems that work time and time and time again. And this all started when I first started investing in real estate from, Southern California, 3,000 miles away in other markets. I had to create systems. Otherwise it wouldn't have worked for me. I would have had too many problems. So the systems we have is essentially, without getting too deep into it, every conversation with a person starts with what we refer to as a strategy session. There's no cost or obligation to anything we do, but that's a conversation with one of our investment counselors, and that's really just to find out where you are, where do you want to go, how do we get you there, what is that roadmap or that plan. So that defines your strategy and your criteria, and we call that essentially a buy box. So when you know what you're looking for to fulfill your investment objectives or your investment goals, then you can start to execute on that. So from that strategy session, we move forward by identifying the markets that make sense for you as an investor, then identifying the properties that fit inside that buy box for you. And so those are the systems that we have on the front end that are interfacing with you as a client, you as the investor. There are systems obviously in the operations of the business in the background, with my operations manager, our team, how often we communicate, how we work with clients, how we bring on new property providers, how we vet people. Those are systems that you can ask about, but you don't need to know about. But the systems in working with you is essentially documented in 2 pages that we call the purchase process checklist. So if you want to see the system, just ask one of our investment counselors to hand you that document. But it's literally a checkbox next to every item, and you could go down that list, with identifying the market, identifying your criteria, et cetera, et cetera. Signing a contract with the property management company who's going to be managing your property, your financing, selecting the lender, sending over the documentation that they need, blah, blah, blah. So it's all laid out very clearly in black and white. And so what I can tell you is it just works flawlessly every single time.
It's great. I love a great system, and I love that you brought up McDonald's. And I feel like other people that have been in business for a long time and have grown some companies and think about it like we have to think in systems, because that's the only way to create that term that we mentioned earlier and we said many times, and that is wealth. If you want wealth, if you want to scale and you want to be above, a property or two, and not saying that's a bad thing, but I just mean get a property if you don't have one, of course, but as you start adding more doors and more doors and more doors, the systems, the team that you have around you, like all the things that you mentioned today, Marco, I mean, they're all crucial and necessary to make sure that you also have the quality of living that ideally you'd want while investing in real estate. So just have to say, Marco, it's been great having you on the show. You taught a lot to both myself and hopefully the audience got a lot out of this. I just have to ask, so what's next? I mean, what's next for you? What's next for Norada Real Estate Investments?
Well, we're going to keep doing what we're doing and expanding our business. I mean, we've been on the Inc. 5000 twice now. We move about 1,000 properties a year, to our clients. And so we want to keep doing what we're doing to help fulfill our mission. Like I said before, is to help 1 million people create financial independence or financial freedom through real estate, investment real estate. And so that's the path that we're on. But as far as the next step, what I would recommend is people visit our website or websites, because we have 2. One is for our podcast, our weekly podcast, and just download our free guide. It's called The Ultimate Guide to Passive Real Estate Investing. And, that's a 30-some page ebook, if you will, that talks about what we're talking about here today, but in greater detail. And it's a fantastic primer for anybody, even if you're seasoned. It's a great primer for understanding what, our model, what we do, how to choose property, what markets to look at, quick rules of thumb, metrics, and all that kind of stuff. So I break it down, in a short ebook that I think would benefit anybody listening to this. But that would essentially be a next step. But beyond that, it's really just having a conversation with an investment counselor, because at that point we can point your compass in the right direction, whether it's something we can help you with or not, but at least we can put you in touch with the right people or put you in the direction that you need to go in order to expand what you're doing.
Fantastic. And name a podcast.
Our podcast is called Passive Real Estate Investing, which is aptly titled. So Passive Real Estate Investing is one of the top real estate podcasts on iTunes and out there. And the website is named after the podcast. It's passiverealestateinvesting.com.
Fantastic. And the website for Norada Real Estate Investments, please. I want to make sure that we'll put all this stuff in the show notes as well. But I know some people are probably listening to this, and I want them to write it down. So what's the website for that as well?
Yeah, I always spell that noradarealestate.com. So Norada, Norada, however you want to pronounce it.
Mhm.
Noradarealestate.com is our main website. And just as a side note, we have a lot of properties on there that are available for investment. But the reality is that only represents 5 to 10% of what's in the pipeline. So if you don't
Mm.
see what you're looking for on there, chances are we have it.
Oh, it's a great insight there. And as I mentioned before, we'll put all those links in the show notes so that the audience can just head right on over by clicking on it. And speaking of the audience, if this is your first time with Mission Matters, we're a platform that's all about bringing on entrepreneurs, executives, and experts, and having them share why they do what they do, like what gets them excited to get up in the morning and to go out into the marketplace and to make a difference in the world. If that's the type of content that you're into, and if that excites you, we definitely welcome you to hit that subscribe button, because we have many more mission-based individuals coming up on the line, and we don't want you to miss a thing. And Marco, really excited to watch you continue to reach that goal of helping 1 million individuals reach financial freedom and success. So much more continued luck on that goal and objective. And thanks again for coming on the show.
Thank you so much, Adam. It's been a pleasure.